A new era for the North American auto industry is dawning, centered in Windsor, Ontario. This city, known for its rich automotive history, is now at the forefront of a transformative shift towards sustainable transportation. The Next Star Energy Plant, a joint venture between Stellantis and LG Energy Solution, marks a $5 billion investment in electric vehicle battery production. This monumental project is not just about building a factory, it's about building a future where electric vehicles dominate the roads, reducing carbon footprints and fostering innovation. This facility promises thousands of high-skilled jobs, positioning Canada as a key player in the global EV supply chain. These jobs are not only a boon for the local economy, but also a testament to the skilled workforce that Canada offers, ready to meet the demands of a rapidly evolving industry. Canada's incentives and green tech strategy are attracting major investments, shifting the auto industry's focus northward. The government's proactive approach in supporting green technologies is paving the way for a sustainable future, encouraging companies to invest in eco-friendly innovations. The completion of the Next Star plant symbolizes Canada's strategic move to capture the future of the automotive world. It stands as a beacon of progress, showcasing the country's commitment to leading the charge in the electric vehicle revolution. While American debates rage over trade, Canada is quietly laying the groundwork for industrial supremacy. By focusing on sustainable development and innovation, Canada is positioning itself as a leader in the global automotive landscape, ready to take on future challenges. The message is clear: the road to the electric revolution may run through Canada. With its strategic investments and forward-thinking policies, Canada is not just participating in the electric vehicle industry, it is leading the charge, setting an example for the world to follow. As Canada celebrates its industrial rise, the country's auto sector is buzzing with optimism. Workers on the assembly lines are proud of their achievements, and the Canadian flag waves triumphantly over bustling factories. For decades, Canada has been a vital part of North America's automotive engine, building cars and parts that travel seamlessly across borders. But suddenly, the mood shifts. The U.S. government announces a sweeping 25% tariff on imported light-duty vehicles, sending shockwaves through the industry. Customs officers ramp up inspections at the border, and politicians tout the move as a way to protect American jobs. This drastic measure threatens the deeply integrated North American auto industry, where car parts and finished vehicles cross the U.S.-Canada border multiple times before reaching dealerships. The entire supply chain, from raw materials to finished cars, relies on this cross-border flow. Industry leaders quickly sound the alarm. They warn that just-in-time manufacturing, which keeps costs low and shelves stocked, cannot absorb such a sudden and massive increase in expenses. Without a solution, factories could grind to a halt within weeks, putting thousands of jobs at risk. Ontario's production lines, closely linked with plants in Michigan and Ohio, now face imminent shutdowns. The ripple effects threaten to paralyze entire communities that depend on auto manufacturing for their livelihoods. For consumers, the impact will be immediate and painful. Car prices are set to rise sharply, putting new vehicles out of reach for many families. Shoppers will find fewer options on the lot, as automakers cut less profitable models to survive. The variety of models available will shrink, and some beloved vehicles may disappear entirely from showrooms. Workers on the assembly lines face layoffs, and dealerships struggle to keep their doors open. Ironically, this protectionist measure, intended to safeguard American industry, could instead trigger a devastating collapse across North America's auto sector. The fallout would hurt workers, businesses, and consumers on both sides of the border. The new tariff overlooks the complex, interconnected nature of the modern auto industry. By disrupting supply chains and straining international partnerships, it risks inflicting long-term damage, not just to the economy, but to the trust and cooperation that have defined North American manufacturing for generations. The auto industry's global supply chain is a marvel of logistics but incredibly fragile. A fire at a key aluminum supplier has disrupted Ford's production for months, highlighting this vulnerability. The bankruptcy of First Brands, a major parts supplier, has left automakers scrambling for alternatives. These events expose the risks of just-in-time manufacturing, which leaves no room for error. Automakers must anticipate and mitigate risks, from geopolitical disputes to supplier health, to avoid costly delays. Building resilience into the supply chain is now essential for survival. The recent imposition of U.S. tariffs has ignited a wave of outrage across Canada, with many citizens and leaders viewing the move as a direct betrayal of the long-standing principles of free trade between the two nations. Demonstrations have erupted in major cities, with protesters waving Canadian flags and demanding action from their government. News headlines across the country reflect a sense of shock and disappointment as Canadians grapple with the sudden shift in economic relations with their largest trading partner. In response, Ottawa has swiftly promised financial support for workers and industries hit hardest by the tariffs, particularly in the vital auto sector. Canadian officials are also preparing a series of retaliatory measures, signaling that they will not back down easily. The government's actions aim to reassure both workers and businesses that they will not be left to face the consequences alone, and that Canada is ready to defend its economic interests on the global stage. Meanwhile, in the United States, the reaction is far from unanimous. Some union leaders and workers have welcomed the tariffs, seeing them as a necessary step to protect American jobs and industries from foreign competition. However, this support is not universal, and the move has exposed deep divisions within the labor movement, as others worry about the potential for job losses and rising costs if the trade dispute escalates further. The reality is that the North American auto industry is deeply integrated, with parts and vehicles crossing the border multiple times before reaching consumers. This complex supply chain means that there are no simple winners or losers. Tariffs threaten to disrupt production, raise prices, and hurt both Canadian suppliers and American plants alike, putting thousands of jobs at risk on both sides. As tensions rise, the situation threatens to spiral into a broader trade war, with ripple effects that could destabilize not just the North American economy, but global markets as well. Investors and business leaders are watching nervously, aware that prolonged uncertainty could have far-reaching consequences. For now, the future of auto workers and the stability of the entire industry hang in the balance, caught in a political crossfire that shows no signs of ending soon. The decisions made in the coming weeks will shape the livelihoods of thousands and determine the direction of North American trade for years to come. U.S. auto tariffs sent shockwaves through financial markets, with auto stocks plummeting. Investors fear the tariffs' impact on profits and growth, adding volatility to a transforming sector. While the U.S. erects trade barriers, Germany extends tax exemptions for electric vehicles, promoting innovation. These contrasting paths highlight an industry at a crossroads: tariffs and nationalism versus innovation and sustainability. Automakers must navigate these forces to survive and succeed in a changing global landscape. Decisions in Washington, Ottawa, and Berlin will shape the future of cars and the global economy. U.S. tariffs have split North American auto workers' perspectives. Some U.S. union leaders see tariffs as a chance to protect American jobs, while Canadian workers fear layoffs. Canadian unions seek government support to cushion the blow, highlighting the pain of protectionist policies. The tariffs pit worker against worker, straining cross-border labor solidarity. The challenge is protecting domestic industry without harming trading partners in an integrated economy. The auto industry faces a perfect storm of challenges, revealing global interdependencies. From digital glitches to supplier bankruptcies, disruptions have real-world consequences. Just-in-time manufacturing's efficiency leaves no margin for error, exposing vulnerabilities. The shift to electric vehicles adds complexity, requiring new supply chains and investment. Consumers and workers face high stakes, with job security and car prices in flux. The battle between U.S. protectionism and Canada's EV strategy will shape the industry's future. Companies must navigate this fractured landscape, where success is uncertain.